Good evening, everyone. Welcome to this evening's class. We'll be continuing with part two of sniper entries. Okay. Now, before we jump into this evening's class, how many of you were at the first class that we did? Or how many of you saw the recording of the first class that we did? Just let me know in the chat box. Okay, I see Mark says I was there. Elaine says me. Okay. Keisha says I was not. Ari says I was not. Uh, okay, so maybe the recording has not been posted yet in the vault. Ari said looking for it in the vault, can't find it. Okay, no problem. It's probably not posted as yet. Okay, Luke says I was there. Dante says I was not. Norville says I will definitely go back and watch it. Wonderful. Okay. Okay, wonderful. Okay, so let's jump into this evening's class. So remember, guys, we here at UOP are not financial advisors. Everything we do here is for educational purposes only. Please be sure to read the disclaimer, the terms and conditions, and let's jump into this evening's class. All right, so on our last class, we did the Elliott wave concept. I'm sure most of you by now get maybe a basic understanding of what the Elliott wave concept is all about. And it's simply looking at the market move in a 5-wave impulse, followed by a 3-wave correction. And this makes a complete cycle. Okay. So we also covered the corrective patterns that are part of the Elliott wave theory. And these are most of the corrective patterns that come into the Elliott wave theory. We have the ABCD pattern, also known as the zigzag. We have the ABC pattern. We have the WXY pattern. We have the WXYZ pattern. We have the leading diagonal. We have the regular flat pattern. We have the running flat pattern. We have the extended flat or expanding flat pattern. We also call it the extended flat pattern. We also have the triangle pattern and the ending diagonal. Now, I know most traders are familiar with the triangle and patterns that we look at and call ranges. So the patterns that we call ranges are most times regular flat patterns, or in some cases, even maybe expanded flat patterns, or maybe WXY patterns or WXYXZ patterns. Okay, they normally would create ranges. Okay. So let's move on. We also covered the best times to enter and exit trades. Now, this is very important, okay? Because you guys, well, when you go back and look at the first episode of our training, you will understand that the markets, every session has a start time, a lunch time, and an end time, okay? Now, we need to understand that these are the times that traders are looking to take action in the market. So generally at the start of a session, they're going to be coming into the market. Okay, so generally if the market was already maybe moving down, they may take it in the opposite direction or maybe continue the previous move. So these are the times that we're looking to take action in the market at the session open, the session lunchtime, or the session end time. Okay, so generally at the session end time, we want to make sure that we're out of any trades that we're in. And when you're trading from the European session, which I believe is one of the sessions that is best to start trading from, because I know a lot of traders believe that there is probably only European traders in the European session. That's not correct, because if some of you are from the US side of the world, you will realize that you will find yourself trading in the European session a lot of the times. Okay, so if you're doing it, there's a lot of other people doing it as well. Okay, so you would generally find the European session being very volatile. Okay, it's going to move big compared to the movement in the US session. So typically, I would like to be done with my trading by midday in the US session, because after midday, most traders are already tired and they're most likely going to leave and go rest or go home or call it quits for the day. Okay, so I typically don't like, getting involved with trades at lunchtime. I'm more looking to exit the market at lunchtime. But if you go back and look at your charts, you will see that on most days by lunchtime, the market just starts to just go flat. It just starts to just range. Okay, especially on um, peers from the European market and the US market. You will see it just go flat. Okay, so lunchtime in the US session, that's generally where you want to call it quits for the day, unless maybe there's a lot of maybe high impact news events coming out in the last part of the session, which is after lunch, and you feel like you would like to take advantage of those opportunities, then it's okay. It's up to you. All right. But if that is the case, you'd be looking for your entries around lunchtime, because there's high impact news events coming out after lunch. So you're looking at lunchtime to take your actions. Okay, so you look for a setup that comes in at that time and then you take action based on that. All right. So this is where we should be starting today. Today, we're starting on the relative strength index. All right. Now, this is my favorite indicator. My favorite indicator. Um, with any other indicator, this is definitely my favorite. Okay. So with the relative strength index, it is also known as the RSI. Most of you are, familiar with it as the RSI indicator. It's, here we have a little bit of information on it. It's a momentum indicator. It's used in technical analysis. Basically, what it measures is the magnitude of the recent change um, to evaluate overbought or oversold conditions in price, whether it's a stock, a price, commodity, whatever it is. Okay, it basically gives you an idea of when the price is oversold or overbought. And I don't like to look at it really as oversold or overbought. This is just a term that is used traditionally, right? But I'm not really a traditional trader. So I look at them as extremes, okay? So I look at the upper extreme, which is the overbought condition, and I look at the lower extreme, which is the oversold condition, okay? Now, maybe some of you may not be familiar with who developed the RSI indicator. Here you can see it was developed by J. Wells Wilder. Okay, and that was all the way back in 1978. Okay, so it's been around for a long time, and I find that it is very, very accurate. It's actually a leading indicator, which means it's a little bit ahead of price. So it can give you a very, very strong signal, okay? If you understand how to use it. So the idea here is to make sure that you guys understand how to use the RSI indicator the correct way. Well, at least the correct way based on my view, all right? Now, the relative strength index, it's a very popular momentum oscillator. Um, as I said, it's a leading indicator. And generally, it measures the strength, whether it's overbought or oversold, between 70 and 30. Now, 70 and 30 is the traditional way of looking at it. And I use 70 and 30, yes, but I find that when you use the RSI with the extreme at 90, and that's the extreme high at 90 and the extreme low at 10, you would be getting a much better reaction from the RSI. Well, should I say from the price? Okay. So before we would use the RSI indicator with a period of 14, and I used to use it with a period of 8 as well. Okay, so using it with a longer period would basically, um, it would be looking at the price over a longer period of time. When you use it with a smaller period, it's looking at the price over a shorter period of time, right? Now, when I use the RSI with a period of 2, I find that it's way more accurate, especially when you're looking at the market on an intraday, um, from an intraday point of view, right? So I use the RSI indicator with a period of 2, and I use my extreme high at 90 and I use my extreme low at 10. And one of the reasons why I use my extreme low at 10 and my extreme high at 90, it's generally because when the RSI goes into these levels, it comes out very strong. So the price reacts to these levels in a very strong way. Okay. Now, a confirmed RSI signal would be a close below 10, then a close above 10. So the price has to close below 10, then close above 10 to get involved in a long or to buy. Okay. Now, if you have a close above 90, then you have a close below 90. That would be your entry to go short on the RSI. That's a sell trade. Okay. Any questions so far as it relates to the RSI? It's a very simple indicator, nothing much to it. You just need to understand that the settings, okay? The settings and what you look for on the price to be able to take advantage of the signals that come out of the RSI. And when you use the signals from the RSI together with signals from, let's say, the trade finder, which gives you Elliott wave, it gives you harmonic patterns. It gives you a lot of traditional patterns like the head and shoulders, like the triangle, and so on. If you're taking your signals off the trade finder and you're paying attention to the market session open, lunchtime, and end time together with the RSI, those are the recipe for sniper entries. Okay, so go ahead, drop your questions in the chat box if you have any, and let me just take a look at your questions. Okay. Okay, I see Keisha says Reginald posted in Discord that he was uploading it now. So I guess he's about to upload the last class. Okay, wonderful. All right. Norville said, which time frame will the RSI strategy work best on? Okay, so the RSI strategy that I use, it works on any time frame, right? So it doesn't matter what time frame you apply it to, it works just fine on any time frame, okay? However, the session times, I find it works better on the 1 hour time frame. Okay, so I like to look at it from an hourly point of view. Okay, so the session start times, it's best to look at it from a 1 hour point of view. All right. You could use it on like maybe a 15-minute or a 30-minute time frame as well. It shouldn't be much of a difference, but I like looking at it from a 1 hour point of view. All right, so let's see here. I see Mario is asking, so if I get a close below, sorry, if I get a close below above 2 or 10. Mario, what you're looking for is to set your RSI with a period of 2. Okay, you're looking at a period of 2. All right, let's go into the trade finder. So this is the RSI settings here. Okay. So where it says length, if you're looking at TradingView, it's going to say length, right? So you're looking at a length of 2. So that's the period. Okay. A period of 2. So that's where you enter to. All right. And these are the levels. This is the upper limit and the lower limit. So the upper limit will be 90 and the lower limit will be 10. Okay. Is that clear, Mario? So this is what it looks like after you set it up. See, it says here RSI 2. So that is the length or the period. And you can see here that we have it here at 90 and we have it down the lower level here at 10. Okay. Is that clear, Mario? Any other questions from anyone? Yes, Mario says yes, it is. Thank you. You're most welcome, Mario. So Mario says, so what is the steps if I get a signal? All right, so this is just a random harmonic pattern that I have on here. I have actually a couple of them. Let me see. Okay, this is the one that is currently hit its PRZ. So it hit its reversal zone. So we can look at this one. So if I were to get involved with this trade, I would be looking to get involved with this trade in the European session. This is, I believe this is Eastern Standard Time that we're looking at here. So the time now is 21. Okay, yes, I think this is the time that we're looking at. So this signal basically confirmed around, this is around 3 o'clock, right? So this is towards the end of the day, all right? And I'm not looking forward to get involved in trades towards the end of the day. However, this is a US and New Zealand pair, right? So it's NZD, USD. So we also understand that the Asian session would give New Zealand dollar, this New Zealand dollar, US dollar pair some movement. Okay. Now I don't trade in the Asian session. So this is not the times that I would be looking to trade at, but the same rules apply. So if you're looking to get into trades, you're still going to be looking at the US session end. So this is going to be around around 4 o'clock or so. That's the time that you're looking to get involved. So we have around here, that's where you're looking to get involved. And you can see here that we had the RSI closing below the 10 level, and then we had a close above. So you have this candle here. Let me just make this bigger. All right, so you have this candle that gave you a close below. Okay, so it gave you a close below, then this one gave you a close above. All right, so this is a good signal telling us that we can go long. Now, when you go long in a case like this, I know the software gave you a level that you can set your stop at. Okay, so you can use whatever stop methods that you want. This is just a recommendation. So this is a recommendation. It's a recommended stop. So you don't have to use this stop. So what I would do is I like to use my stop at the low of the previous swing, right? Sorry, the current swing, I should say. So this is the current swing here. This is where the price came down, and this is where I got my RSI signal, and the price starts to move back to the upside. So I want to put my stop exactly, just below the low. All right, maybe 1 or 2 pips below the low, and this is where my stop would be, exactly here. So it helps to limit my risk. Okay, so it reduces my risk greatly because I'm taking a very strong setup. All right, so if I enter on the close of this bar, my stop goes here. I can target my target 1, or I can target 2, right? Now, I got a sniper entry and I'm now looking for a sniper exit. Okay, so how am I going to exit this setup? I'm going to be looking for at least the session lunchtime. Okay, so the Asian session market open would be an area where I want to look at, or we can look at the Asian session lunchtime. Okay, so for an exit. So if it hits my profit target before then I'm out. If the Asian session lunchtime comes in and the price is moving to the upside and I get a red candle close, then I'm going to exit. Okay, because that could be a good indication that the market is about to switch to the opposite direction. All right. But as I said, I don't trade in the Asian session. I trade the European and US session. So let's see if we can find us a trade from the European and US session. Okay, let me just change my time to New York time. One second. Okay, so we'll use Eastern Standard. That's New York time. And let me just refresh this. And the European market opens at 2 a.m. So we're looking at between 2 a.m. and 3 a.m. Okay, so we have, okay, this is an exotic. I typically don't like getting involved with the exotics because the spread can be extremely big on them, and that can be a problem. So I typically don't like getting involved with the exotics. So I'm going to leave that one alone. Okay, and I'm going to try to stick with pairs that are from the European side of the market and the US side of the market. Okay, so let's see here. What do we have? Okay, this one is Euro NZD. This is from the Asian and European side of the market. So let's take a look at it. All right, so this one is, all right, so this signal kind of came in, this pattern kind of came in a bit late. So this is around lunchtime for the European session. Now, here you can see that we're getting a close above and we're getting a close below. All right. Now, when I get this type of setup, this is the reversal zone for this pattern formation. And when I get this type of setup, I'll be looking to enter on the close of this red bar. Okay. My stop goes exactly here. Okay. So this is a situation where I would have been getting involved. This is on the 1 hour time frame. As you can see, this one did not go to my profit target, but this would have been a lovely entry for this pattern. Now, typically, if my stop is hit, what that signals to me is that the market is looking to go in the opposite direction. And if the market comes and hits my stop, I can switch directions and go in the opposite. So here you can see the price comes up, it would hit my stop, I'll be stopped out. I can decide to go long in a case like that. And if I'm going long, I need to understand what the greater pattern formation is, right? So if I just, reduce the size of the candles a bit, then I can do some analysis on it, and I can see that this is the high, and I can see that this is the low, and I can tell that price is in a price range. Okay, so yes, we're getting a harmonic pattern in this case, but this harmonic pattern is going to either bring the price back down, or it's going to be respecting these range top and lows, because it may be looking to create something more like a flat pattern formation according to the Elliott wave theory. Okay, so if my sell trade failed, I go long, I exit at this area. I'm not going to hold on to the long. I'm going to exit when it hits the top. Okay, so when it hits the top, we can refer to this as a resistance level. So it hits this resistance level, I would exit my trade. So whatever loss I made here, I would make it back on this buy setup to the upside. Okay, now I'm still looking at this as a short setup, because not because the harmonic pattern failed, it means that the price is not going to go back to the downside. Okay, so now that the price hit this level, I'm looking for a short. Now, 8 a.m. Eastern Standard is the beginning of the US session, right? So since this candle is opening at 8 a.m., the price goes up. Between 8 a.m. and 9 a.m., I'm looking for a signal. So this candle opened at 9 a.m. On the close of this candle, I'm looking for a red candle so that I can sell this. Okay, so when this red candle comes up, this is my sell signal. So I'm going to sell here, okay, on the close of this red bar. So if I sold, you can see that the price is moving down. And when am I looking to exit? I'm looking to exit at lunchtime. So at lunchtime, I'm looking for my first exit. Okay, so you can see here that this candle opened at, let me just make it a bit bigger. You can see here that this candle opened at 12 p.m. Eastern Standard. And you can see the next one is a green bar moving back to the upside. So on the close of this green bar, I'm going to look at this as, you know what, the price is looking to move in the opposite direction. It's now after lunchtime. Traders are coming in and they're pushing the price in the opposite direction. So I'm going to exit. Okay, so I would exit this trade by the close of this green bar. So I would make a little profit and I'm out. Now you can see here that the market did not go all the way to my profit target within that these two sessions. It simply just kind of went, you know, up and down, just moving sideways from, if you're going to look at this, it's just moving like this. Okay, let me use a rectangle. It's just moving in this range. Okay, so the market's just moving in this price range. So we did not really get much movement. If we sold, we would have been able to exit on this green bar and we would have made a little bit of profit. Okay, now if you notice, this is European session and Asian session. So in the US session, we may not get much action because we're coming from the European session into the US session, not the Asian session. Okay, so it would be best if you get involved with pairs that are Euro session and US session. And if you're looking at pairs that are from US session and Asian session, you can trade from the US session into the Asian session with it. Now, I typically don't like trading in the Asian session, as I said, because in a lot of cases, the Asian session can cause very big spreads. So you don't really want to be trading at a time when you're at a disadvantage with the spreads. Okay, so I try to focus on the European session and the US session. All right, any questions so far? Let me just go to the chat box. Let me see here. All right, I see some good questions are coming in. Let me just try to start with the first one. Okay. All right, so I see here Norville is asking, do you enter at the beginning of the next candle? You don't have to enter at the beginning of the candle. What you can do is you can wait for the candle to close. Okay, you wait for the candle to close. So if this is a sell setup, you're looking for a red candle. Okay, so the price is moving up into the sell setup, the reversal zone. What you're going to look for is a candle that tells you that the price may be ready to go down. So you look for a red candle close. And you're looking for that red candle close between your session open. So it's your session open time, and you're looking at the next hour. Okay. So the session is supposed to start at 8 o'clock in this case, the US session. So you're looking at 8 and you're looking at 9. So if you're looking at the candles, the hourly candles, you're looking at the 8 o'clock candle open, and you're looking at the 9 o'clock candle close. Okay. So the 8 o'clock candle, if this is a sell setup and it closed red, then you can sell. If the 9 o'clock candle closes red, then you can sell. The 8 o'clock candle closes green, then you're not selling. You're waiting for the 9 o'clock candle to close red so that you can go short. Okay. The market moves in many different pattern formations. So we need to understand as many of these pattern formations to have a better understanding of what can take place in the market. Okay, so if you're looking at Elliott waves and you're looking at harmonics and you're looking at the traditional candlestick formations like head and shoulders and triangles and ranges, then it's good to have an understanding, at least a basic understanding of the Elliott wave theory. Okay, the Elliott wave theory is the foundation of all price action. Okay, all price action. The Elliott wave theory is the foundation of all price action. Doesn't matter what chart you look at, the Elliott wave theory is there. Okay. All right. So let's see here. What other questions do I have? Okay. C. Mario says it did that for several hours between 22 and 23. Um, what do you mean by that, Mario? Mario says, how do you know that the signal, what signal to take? Um, it repaints. Okay, so on the Trade Finder, as far as I know, the Trade Finder does not repaint. So the Trade Finder signals does not repaint, as far as I know. If I'm wrong, please correct me. Okay. Mario says, okay, I'm not sure. Mario's looking at dates, but I think it was a different pattern that was up, and those patterns were, some of them were completed and some of them were still in the making. So I'm not sure if you were looking at the wrong signal. Okay, I'm just looking at this one here, this cipher. Okay. I see Norville says, would it make sense to set a buy stop above your stop loss and the TP at resistance? Yes, that makes a lot of sense. You can do that. That would help you a great deal because when you set your stop, you want to set your stop at an area where you know that if your stop is hit, it means something. Okay. So when my stop is hit, it means that the market is going in the opposite direction. Okay. Especially when you have sniper entries. When you have sniper entries, if your stop is hit, it means the market is moving in the opposite direction. So in this case, the market was looking to hit this resistance level before it goes down. Now I'm only mentioning resistance because resistance and support and resistance exist within pattern formations. I know a lot of other traders look at support and resistance in different ways. Like, for instance, another trader might say that, okay, let me use a rectangle tool for this one. Another trader might say that this is a resistance zone, right? Let me just change the color. Oh, yes. So another trader might say that this is a resistance zone, okay? And that trader may be correct based on the method that they're using, that it may be a resistance level, okay? Because you can see that the price comes down, it bounces off that level, goes up, comes down, bounces off that level, bounces off that level again, comes here, bounces off that level, then finally breaks that level. I don't look at price in that way, okay? This is a trading method mainly for support and resistance traders. I don't look at price in that way. I look at price with pattern formations, okay? So if I'm to remove this, I would look at price like this. We have 1, 2, 3, 4, 5, and this would be Elliott wave, right? So we have 1, 2, 3, 4, 5. So this is a 5-wave move to the downside. Now, this is not an impulsive wave. I refer to this as a corrective impulsive wave, right? Because it is a wave of a corrective wave. It's an impulse of a correction. Okay, so it's corrective impulsive, which means it has violations within the Elliott wave theory. Okay, so we have this here as one wave to the downside. Then we have 1, 2, 3 up. So that is the correction. I can label this as ABC. So A, B, and C. Let's change the color. Let's make this one look nice as well. Let's see. We can use, leave it in blue. Just make the line thicker. Okay. So this is 5 waves down, 3 waves up. And this is most likely 5 waves down as well in a very corrective, impulsive way. All right. So this would be, let me just try to outline this really quick. So 1, 2, this would probably be 3, and this is probably 4 and 5. Okay, so that's another 5 waves down. So we have 1, 2, 3, and the price moves back to the upside. Now, I use methods that I created. This one is called market geometry. This is where I measure the first impulse that I get, and I project it after the correction of the after the pullback of the corrective wave, right? So this gives me an idea of where the next impulse wave should end. So you can see here that it's basically making a measured move. So when the price gets to this area, I know that that's where that move down is going to expire. And you can see it ended pretty much in that same area, whereas other traders would be looking at it as a support level. I'm just measuring the wave. Okay, so I look at it, in a little bit of a different way. Now, this wave is going back to the upside. What I would have been looking for is this move. I would have been looking for this move, right? So that move, I'll be looking for that move to come here, right? Now, since that did not happen, the price pushed up and it stopped. We would look at this as more of an X wave, right? So since this is not the next impulse, which is a repeat of this corrective impulse here, this would be considered an X wave. An X wave is more or less a connector wave, okay? So now, since this is a connector wave, I could look at this as let me just use, I'll use WXY. So this would be W. This entire 1, 2, 3 wave would be a W, and this would be an X, right? And this would be a Y. This would be a bigger 3-wave move. All right. Now, after this bigger 3-wave move, then I'm going to expect this wave to repeat itself like this. So this would give me a very good idea that this is where this wave is going to end. And this is exactly what happened. The wave ended right in this area. Okay. So this would tell me that this is potentially the area where I want to take my action. Okay. But since this is a harmonic pattern, then yeah, the reversal zone would be very tempting to get involved with, but you need to pay attention to the fact that this is, we're now in the US session, not the Asian session. Okay, so this is a European pair and a Asian session pair. Okay, not a US session pair. So we won't really expect much movement in the US session. Okay, so I would say this is the reason why this did not go in our favor. It went back to the upside, and here it hit our resistance level, if you would like to call it that, or the end of the pattern formation. So the pattern ended here. We're expecting the price to go back to the downside. This is the beginning of the US session. We got 8. So this candle opened here at 8 a.m. Eastern Standard, and the 9 a.m. Eastern Standard candle gave us a bearish candle. This bearish candle is where I would be excited to get involved because it hit our resistance level, or it completed this 3-wave pattern formation. So I know that at this level, I'm expecting the price to start to go back to the downside. If I'm an intraday trader and I would like to get involved, I would know that in the US session, I may not get much movement because this is a European trade and a Asian. So this is European session and Asian session. That's where I'm expecting to find that movement. So in the US session, we did not get much movement. Okay, it just kind of ranged in the US session. So towards the Asian session, that's where we're going to be expecting movement to kind of kick in. All right. So at the end of the US session, we're going to be expecting that price will start, picking up some movement to the downside. So if it does not move in the Asian session all the way, then we can expect that in the European session, we will see the rest of the move to the downside. If we have profit targets here, we can start taking off our profits at these levels, or this level down here would be the next good place to take some profits as well. If you want to use measured moves, then you can simply just measure the previous impulse. You can simply measure the previous impulse, and this would give you an idea of where you can expect this move to go. Okay, so you can expect maybe you get all the way down here, but it's not going to reach that level in one day. In most cases, it won't. It may take a while before it gets there. Okay, so at least that can give you a pretty good idea of where you can expect that move to be going. And you can take your time as an intraday trader and just look for setups in that direction. Okay. Any other questions? All right, let's see here. Looks like a lot of questions came through. Let me just scroll through them. Let me see here. All right. I see Janitha said, which side of the green bar do you enter the trade? Which side of the green bar? Let me see here. Which side of the green bar? I'm not clear on what you mean by that. Do you mean this green bar? Is this the green bar you're talking about? This one right here? Yes? Okay, you're not entering on that green bar because you're looking to go short. So since you're looking to sell, you want a reason to sell. You're going to enter on the red bar because the red bar shows you that the price is going down, right? So once you get a red bar, that's where you're going to enter. And when you enter, what you're going to do is place your stop just above the high. Let me just remove this box. So just above the high, I'm just going to put a little line here. So just above the high, that's where you put your stop. I'll make it red. See? So that's where you put your stop and you enter on the close of the red bar. So let me put a little line in here just to show you. I'll make this line blue, right? Let's make it a bit bigger. Right, so your entry would be here on the close of the red bar, and your stop goes just above the swing. Okay? Okay, so Janitha says, enter as a sell on the close of the red bar. That is correct. Because you're looking to go short. You can't be going short on the green bar. The green bar shows you that the price is going up. So you want to go short on a red bar because the red bar will give you confirmation. Confirmation that the price is going down. Okay, see here, let me just look at another. Okay, let me just go through. All right, so we have, Shanita says, thanks, no problem. We have Ari says, is this more for scalping or can you use it also on long term? Okay, this is not really scalping. You can use it to scalp if you'd like, but this is more for day trading. So it's more for intraday trading. Okay. If you want to swing trade, you're looking at using the Elliott wave theory, which is, let me just reduce this. The Elliott wave theory would be, all right, so if I take off the harmonic pattern, all I have left is just my regular price action. And what I'd be looking at is the patterns that I see on my chart, right? The Elliott wave patterns that I see on my chart. And this is an Elliott wave pattern. Let me just, these are Elliott wave patterns. Who can tell me what this is, right? Look at this. Take a good look at it. And now, which one of these do you think it is? Just let me know in the chat box. Just drop the name in. Shanitha says regular flat, and she's right. Let's go back. If she says regular flat, that can be a very good answer. However, we did see a little break above the high in this area. So yes, you could look at it and say it's a regular flat, but whenever you get a break, then it becomes a different pattern. And who can tell me which one would it be? Who can answer that one? SERE says running flat, and that is correct. It becomes a running flat. Norville says running flat as well, so that is correct. It becomes a running flat. Now, they're very similar to each other. They basically do the same thing, but if you understand the formations, then it gives you an edge, right? So it breaks the high, it's no problem. It's not a regular flat anymore. It's now a running flat, okay? So this is a running flat, and what can you expect from the running flat? What's going to happen? What are you expecting in this area? What are you expecting in this area? Right? What are you expecting to happen here? Ari says down and the breakout. Okay, that's what you're expecting. Who can tell me what? Let me just erase some of this. Who can tell me? Let's make this a bit bigger. Who can tell me what this is? Who can tell me what that is? What is this? Ari says correction. Who else? Who else has an answer? Elaine says retest. Retest of what? Elaine says, ah. What did you see, Elaine? Let us know. Fill us in on what you saw. Elaine says retest of the upward break. Okay, so I think I understand what Elaine is trying to say. Elaine is saying that it's a retest of this top or this resistance level, as most traders like to call it. Okay, so this is where the move to the upside ended. This wave ended here, and this could also be considered a resistance level. So it's coming back and retesting this area. Now, I am not a support and resistance trader, okay? I understand support and resistance in the traditional way, but I also understand that support and resistance best exist within pattern formation, okay? So this may be a retest of this resistance level, but this is a pattern of its own, okay? So if I analyze this pattern, I will find reason as to why it ended in this area. Okay, so this is a pattern on its own. And for a lot of traders who like to use trend lines, you can simply look at this and you run a trend line and you look for the breakout, and that would confirm that, okay, now the price wants to go down. And if the price wants to go down, this would be wave one. And you'd expect something that looks like this. Let me just try to bring this a little smaller. You'd expect something that looks more like this. Since this is the end of the correction, you'd expect something that looks like a 5-wave move. So this is 1, 2, maybe 3, maybe 4, maybe 5. Something that looks like that. Okay? That's what you're going to be expecting. A 5-wave move to the downside. So if you're going to use your sniper entries without a pattern formation, then you're just simply looking at the session open times, the session lunch times, and the session end times. Okay, because these are where the market would definitely make some moves. Pay attention to the different pairs that you're using. If you're a trader that focuses on trading during the European session and US session, then you're not looking at trades that have peer aside from the Asian session. Okay, so you're not going to be focusing on a Euro New Zealand dollar pair, because you would know that it's going to make maybe it's going to make a move in the European session, and the next time it's going to make making a big move, it's going to be in the New Zealand session. Okay, so you don't really want to be getting involved with that one, because you will not be um, trading in the Asian session. So let's see if we can find something. Okay, let's see if we can find something from. Okay, we have something here, but this one says 10. Let's try this one out. Okay, so this one is telling us that we have a setup coming in at around 9 a.m., right? So at 9 a.m., this is the US session. This is the start of the US session. At 9 a.m., we have some red candles. We have price completing this Gartley pattern. It's completing this Gartley pattern around 9 a.m. And we're looking for a green candle to get involved with a long setup. Okay, so you can see here that we have some red candles coming in, and our entry is now coming in around 11. So we're not really excited to get involved around that time. We're looking for an entry between 8 and 9 o'clock. So within between the close of the 8 o'clock candle and the close of the 9 o'clock candle, that's where you're looking for your entries. You're not looking for entries around lunchtime, because this is a Euro session pair and US session pair. Okay, though pound is no longer part of the European market in terms of the Brexit situation, but it still falls within that session. Okay, so you're looking at the European session and US session. We don't want to be holding trades at lunchtime in the US session. In the US session, we want to be exiting our trades by lunchtime. Okay, so by 12 o'clock, we want to be out of the market. So if we took this entry, if we had gotten an entry between 8 and 9 o'clock, by 12 o'clock, we want to be done with the trade. Between 12 and 1, we want to be out. Okay, so this is basically showing us that because we did not get the entry between 8 and 9, the market is not really moving anywhere. It's not really going in our direction. Okay, it's now looking like it's picking up to the upside, and this is coming in. Let's see here. This started to move to the upside closer to the end of the day. Okay, so you're looking at around 4 o'clock and 5 o'clock. That's when the market starts to move back to the upside. We're not looking to get involved in trades around that time. That is the end of the US session. We're not looking to get involved in trades around that time. Okay, around that time from lunchtime in the US session, the market typically tends to slow down, goes really slow. So at that time, you don't want to be getting involved with trades. So what you're going to be looking at with this pattern formation, you're going to be waiting for the European session to open. So by the open of the European session, that's where you're going to start looking for your entry. Okay. If the market is still looking to move to the upside, you'll be looking for at least a close below, close above, and once you get a green candle, you're looking to get involved to go long on this pair in the European session. So that's the beginning of the European session. Okay, so this is a setup basically for the European session. So you don't have to jump into every trade as it pops up. What you can do is just make sure that you have a reason to enter. Yes, the pattern completed, but when is the best time to get involved? The best time to get involved in a trade is not simply because the pattern completed. You need to understand when the market is going to move. The market moves at the open of the session, it moves at lunchtime, and it moves around the end of the session. Okay? It all depends on the lunchtime and end time. If you have the lunchtime coming in, for example, in the European session, you have the European session and the US session overlapping each other. You have US session traders starting to trade in the European session. So there's a lot more volatility going on within the European session and US session. So that's the session that you really want to focus on. You don't really want to focus on the Asian session, especially when you're not looking at a pair from the Asian session. Okay. All right. Any other questions? In the meantime, let me just look, see if we can find ourselves another pair from both the US and European session. Okay, nothing here. Okay, here's one. We have Euro USD. Look at this one. Look at the time. You have this pattern completing itself at 8 a.m. Eastern Standard. So it completed itself at 8 a.m. Eastern Standard. The next bar is a red bar. This was a bit aggressive. Okay, so this one came in a bit aggressive. This bar came all the way into my profit targets. Okay, but if you entered on the close of this red bar, what would give you a reason to do that since this bar is so big? Okay, let's compress the chart a bit. If you're using the Elliott wave theory, can someone look at this and tell me what pattern you think we may be looking at within the Elliott wave theory? Anyone? What pattern do you think we could be looking at? I'm just going to take off this pattern. What do you think we may be looking at? Anyone? What pattern do you think we may be looking at right now? Just by looking at the chart, what do you think? Ari says M formation. If you're looking at an M formation, that is not according to the Elliott wave theory. You're looking at harmonics, right? So you're looking at bat and crab and that type of stuff. But according to the Elliott wave theory, these are the patterns that you're looking at. These are the corrective formations that you're looking at. Which one of these do you think it is? Janitha says WXY. Not a bad observation. Let's go back. She says WXY. It could be considered a WXY. And this is 1, 2, 3. So that could be W. And this is 1, 2, 3. That could be X. And this is Y coming here. Right? So that is Y. Now, let me just measure this wave. And I'm going to just make it bigger so I can make sure I put that projection accurately. I think I got it accurately. Yeah, I think I got it accurately. So I'm hoping this is the high. All right. So here you can see that we have a measured move, right? So this wave is equal to this wave. And so this ends in this area. All right. So the WXY, this pattern ends here simply by using market geometry. Okay. Now, if we entered on the close of this red bar, because this is where we actually got that signal, right? So we got a red candle close. Now, note that with the RSI, we did not have a close above 90 and then a close back below 90. Okay. Now, typically when you don't get a close above 90, then a close back below 90, the move is not very strong. Now, yes, we did get a strong move with this candle, but it does not mean that it's going to be going much further. Okay, it's just a short wave. Once it closes above 90, then below 90, then you're expecting a stronger move to the downside. Okay, it's going to be more of a long-term move to the downside. So this one is more of just a corrective move. Okay, so if we entered at the close of this 9 o'clock candle, when should we look for an exit? Can someone tell me? When should we look for an exit? Okay, I see Shanita is asking how many pips are we looking, I guess, for profit. I'll let you know that in just a bit. So Mark says we should be looking for an exit around lunchtime. Norville said at the end of the trading session or at support. Okay, so this level is the support level because this is the previous low, right? So this is the support level. So you're looking for your exits at this level and you're looking for your exits at lunchtime. Because remember this setup came in at the session open. So we're looking for exits at lunchtime because in the US session around lunchtime, things tend to slow down. So let's see. Lunchtime would be 12. So the close of this red bar would be 12. Now, what you're looking for is the close of a green candle. So here you can see you hit the support level, so you can exit. Once you hit that support level, you can exit because it is already after 12. Okay, so you can exit at that time. If you did not exit at that time, when you get your first green candle, you should definitely exit your trades because it's giving you a signal that price is potentially looking to move to the upside. Okay. You can also look at candle formations, candlestick formations, I should say. Who knows what this candlestick formation is? This candle right here. Let me just put a little arrow to point at it. That candle that I'm pointing at. Who knows what that is? I see Ari says a hammer. And the hammer shows you that potentially the price could be moving in the opposite direction. So if you get a hammer at a support level or a hammer coming in after 12 p.m. Eastern Standard, then that is signaling to you that the move to the downside is most likely coming to an end. So you should exit the market at that time. So you can look for various reasons to exit. You just need to make sure that it's around the session times, which is market open, lunchtime, market close. Okay, so we have session open, session lunchtime, session close. These are the times where you will get the best entries and the best exits. All right, Norville says doji. Okay, this is not really a doji. A doji has no body. Okay, this one you can see it's red. So if it was just a white line, then you can consider it to be a doji because a doji candle has no body. This one over here, this is another candle that could tell you that it's about time that you exit. This is more like a spinning top. It has a very small body, um, and the wick above and the wick below are approximately equal length. So that's another signal that you could exit the market. Okay. But typically, once you start seeing your candles getting smaller and smaller and smaller, yeah, that's a reason to get out. The move to the downside is drying up. So you should exit. Okay. Any questions? Anything else? Any other observations you guys have? Anything else you'd like to add? Let's see if we can find one more. This one is strictly European session. We got Euro pound. We have a bat formation. When did this one complete? This one completed at 8 a.m. Eastern Standard. That's in the US session, right? Now, look what's happening. This is giving us a signal to go short in the US session. So this is the open of the US session. This is where it's telling us to go short. Let's see where the open of the European session was. So here you have 2 a.m. Let me just put an arrow here. Good. Do you see this? This is 2 a.m. Eastern Standard. So this is between 2 and 3. Okay. Now this is where the market is opening. If you had a setup telling you to go long at this price, that is where you want to go long. Now, if you're looking at the Elliott wave theory, then here's what you have. You have this as your high and you have this here as your low. Okay. So inside of this range, you're getting a bullish candle at the session open. So the 2 a.m. candle closed green. That is a reason to get involved with a long setup. This one is the 3 a.m. candle. It also closed green. It broke out of this sideways move. That is another reason to go long because you're breaking out of this range of this correction. Okay. So you have two reasons to go long, and that is around the session open. And look what happens. The price continues to move to the upside until 8 a.m. Well, more like 9 a.m. Eastern Standard. That's where it stopped because it completed this harmonic pattern formation. So you had session open. It continued moving into the session lunchtime, which is around 5 a.m. Eastern Standard. We did not get a reason to exit at that time because, as you can see, all the candles are still green, no red candles. Okay, so we will hold on to the trade until we get a red candle. And that red candle has to come at the session lunchtime or the session end time or the open of the next session. In this case, it would be the open of the US session. So at the open of the US session, it was still green. 1 hour later, it's red. So on this first red candle, that's where you want to exit. So 8 to 9, you look for your exit in the US session. Now, since this is only a European instrument, I would not be too excited to trade this one in the US session. It would mean that it would be moving very slow because it already completed its move. And if you understand the Elliott wave theory, you would know we have impulse, correction, impulse, correction. Okay? So if this is going to be the start of the next big impulse to the downside, then that would be great. But it's going to start off slow. All right? If you want to get involved with this trade, and you did get involved on the close of this red candle, your stop goes above the swing, and you're going to be looking to hold on to it either to this profit target here, or you're going to exit by lunchtime. So this is 12 p.m. Eastern Standard. And what is the color of this candle? Green. Because this candle is green, you will exit. Any questions? When you're looking for your exits, you don't necessarily need to pay attention to the relative strength index. If it is below 10, since you're looking to go short, and the RSI is below 10, and it closes back above 10, that is definitely a reason to get out, because you can expect that maybe it could be pushing very aggressive against you. Okay? If it's not below 10, then it's most likely not going to be pushing very aggressive against you. But once you get a green candle, you should exit. And that green candle should be coming in at lunchtime, or a session open, or a session close. Okay? Those are the times that you're looking to get involved. By the session open, and you have 1 hour after. Okay, so we have Elaine says, how does the RSI play into entries and exits? Okay, so the RSI plays into entries in which once you're getting your entry and the price has closed above 90, so we're looking to go short. So the price has closed above 90 on the RSI, and it has now closed back below 90 on the RSI. That would give you an indication that you can expect a strong move to the downside. Okay, if this is happening around the session open, or the session lunchtime, or the session end time, then it would be indicating to you that you can be expecting a strong move to the downside. Okay, so remember, when you're trading, you need to pay attention to the pairs that you're looking at. And I focus more on the European session and the US session. So when I'm talking about a session open, I'm talking about the European session open. When I'm talking about session lunchtime, I'm talking about the European session lunchtime. I'm also talking about the US session open. And I'm also speaking of the US session lunchtime. Okay? So these are the times that we really focus on. We don't really want to be in a trade after lunchtime in the US session, because the market tends to slow down greatly. Okay, so this would be my exit at the US session lunchtime, and this is what happened afterwards. You can see here, it's just slow, not really going anywhere. Okay, so the next time that I want to get involved with this setup would be the beginning of the European session. So that would be 2 a.m. Eastern Standard to 3 a.m. Eastern Standard. So the 2 a.m. candle open to the 3 a.m. candle close. That's around the time that I'm looking for an entry. I see here, Norville says, what determines your profit target? Okay, so if I'm using, for example, I'm using harmonics, or I'm using traditional patterns, we all understand how we look for our profit targets with traditional patterns, and even with harmonics. With harmonics, we use Fibonacci, right? So with harmonics, we use Fibonacci. So it's either going to be from C to D, or it's going to be from A to D. So different traders look at the profit targets on harmonics in slightly different ways. Okay, so on this one, it's from A to D. All right, so you can see here that we have 38.2. This is the first profit target. And then you have, this is the 0.618 level. Okay, so these are the two typical levels when using harmonics that we look at as profit targets. With me, what I look at is I look at measured moves. So I'll measure this wave. I project it here. So this wave is my measurement. I'm going to use an arrow tip and I'm going to project this wave over here. Why? Because this is my impulse and this is my correction. So at the end of my correction, I'm expecting another impulse like this to follow. Okay, so I can target this low, right? So I can target this low as my exit area. If this move is not expected, if this move is not going to be coming down, what's going to happen is it's going to make a three-wave move to the downside and then move back to the upside. Okay, and if I'm looking at my session times and I'm looking at my exits relating to session times, I would be able to exit without having this trade go against me and stop me out, because I'll be paying attention to trading within the session times. I'm looking at session open for my entries. I'm looking at session lunchtime for my exits, or entries in some cases if the setup comes in at the session lunchtime. Then I'm looking for my entries at that time. If I'm entering a trade at the session open, then I'm looking for my exits at lunchtime. If I don't get an exit at lunchtime, then I'm looking at my exit at the beginning of the next session or the end of the current session that I'm in. Okay. So these are some of the things that we would look at to determine our exits. You can also look at your profit targets based on the pattern formation that you're looking at. You can also look at support and resistance levels if that is something that you like to trade. Okay, but the session open, session lunch, session end are the best times to take action in the market. All right, I see here that Norville said that would be 1.618. Okay, I'm assuming that you mean this level. Is this what you mean? This level here being 1.618? Is that the level that you're, okay, yeah. So it's not necessarily the level that I'm looking at. I'm just projecting the previous impulse. So I'm projecting the previous impulse. This is a measured move. I call this market geometry. This is also a method that I created using measured moves. Okay, I see here. Do you ever take trades after lunch? I don't like to. I don't like to take trades after lunchtime in the US session. As I said, generally in the US session after lunchtime, the market slows down tremendously. So it doesn't really make sense to be involved after lunchtime. It's too slow. As a day trader, you want to be in and out. You don't want to be in a trade, the market's moving extremely slow. You want to be in the trade, out the trade as soon as possible. Okay? So you don't want to be holding on to a trade overnight. You don't want to be holding on to a trade until it goes against you. You want to be able to get in and get out with your profits. So you need to have sniper entries and you need to have sniper exits. And if you focus on entering at the beginning of the European session, then you can look for, if you find an entry at the beginning of the European session, then you can look for an exit at lunchtime in the European session. Or if you don't get an exit at lunchtime, then you can look for an exit at the open of the US session or the close of the European session. Okay? But definitely by lunchtime in the US session, you want to be out of whatever trades that you're in. So by lunchtime, you look for an exit. If you don't get an exit by lunchtime, so let's say the market continues moving in your direction and it's lunchtime in the US session, you don't have to jump out. You can hold on to it. But if you find any reason to exit, you should exit because it already came to lunchtime, and around lunchtime, typically the move will slow down. If it doesn't slow down because maybe there is some sort of news event, some reason for there to be volatility in the market after lunchtime, then you can hold on to it. But don't jump into a trade or hold on to a trade during a high impact news event because the market could just move aggressively against you if you're not paying much attention, because it could have reached a level where the move is over and you did not notice. And if you don't notice, then the price could go aggressively against you, taking back all of your gains, maybe even causing you to suffer substantial loss. Okay? All right, so now we're way over our 1 hour allotted time. Don't want to keep you guys too long. Let's see here. Ari says, is it more safe to go in and out all the time or stay in the trade until it hits take profit? Your take profit is an area where you think the move will end. It does not necessarily mean that that is where the move will end on that day. It could eventually get to that point, but it does not mean that the price is going to move to that take profit that you set in a straight line. Okay? So if you have a reason to exit before you get to your take profit, you should exit. If you're able to get to your take profit before having a reason to exit, then it's okay to exit at the profit target that you set. Because remember, you're looking at sniper entries and sniper exits. Okay? You want to be able to get in at the right time and get out at the right time. And I'm sure that a lot of you have experienced that you get into a trade, you're holding on to it, you maybe hold it overnight, you go to bed, you wake up the next day, it's a loss. But when you went to bed, it was in profit. That's because you held the trade past the time that you're supposed to. Okay? So if you exit the trade at the right time, you'll be able to retain profits. Let's see here. Ari says, got it. Wonderful, wonderful. Okay, guys, thank you so much. It's been a pleasure having you once again. I'll let you guys go for now. I'll see you guys on our next session. Bye-bye for now.